even more buyers stepping in. So it was just a great confirmation that you're wrong when you see this huge volume coming in right where you got in. So very easy just to see that and fall on your sword and get out of that trade before you end up getting stopped out. And then we move up here, and this is big volume at the high here is probably stops being hit, and this as well. So this is just real easy to see order flow continuation against your trade. Very simple. And this is it zoomed in. So here's our imbalance at the high. We sell this, and sellers hit the bid, get a little bit of an imbalance, but then we get lower to this. There's a lot of volume in this area, and then even more volume comes in, and it's just probably trading back and forth for a while, and it finally moves up, and it can't trade back up there, and then some more sellers come in and step in, and the auction moves lower, and then all this buying absorption steps in here, and then we see this change in sentiment, as I've mentioned, with the volume points of control really giving you a nice heads up as the auction moves right back up to your entry area, and we got large volume stepping in right at our entry area here. These are just trades scratching or whatnot, and more buyers stepping in. So you got to be real careful of that, obviously, and don't be married to your trade at that point. You can see clearly that the volume or the order flow is continuing against your trade. So just get out. It's that simple. So here's our third scenario here. In this example, this is just another example of a short trade. The reason why I keep pointing out short trades is it seems a lot of people try to fade moves, and the way the market's been lately with these powerful moves to the upside, I think a lot of people are just stepping in front of the freight train all day. So I'm really emphasizing this here. So in this example, this is our previous session's high, and I'll obviously provide a zoomed in version of this, but just massive selling absorption up here, and we had a strong rally, and the market ran up to the second initial balance extension there, and a lot of traders use that as target areas. So a lot of people getting out of their longs there, and that broke the rally, and the market just kind of traded right back down there. So just back into balance and two-way trade coming back into the market. Then the next day, so this is our reference point here, this major selling area. The next day, we see at the open just massive buying coming in, so just a huge buying imbalance with the volume point of control at the low of this bar. And again, I'll show a zoomed in perspective of this, but this huge imbalance here, and comes up, and we just get this big volume up here, and just these are probably stops being hit from here, and just a big inventory being let out. And you say, okay, well, since all these buyers from here on up probably had targets up here to take out these stops, and they're getting out of their trades, I'm going to sell this with the idea of the market trading back into this previous session's range. And here's our previous value area high, here's our close, maybe we want to get that gap fill or something, and this is the previous session's close or point of control there. So that would be kind of your target areas for this short trade. So the market opens up, we clear all that inventory, and we come down to that previous high. And this is our key reference. We want to see the market trade through this and continue to auction lower and take out this low and fill in this quick move here. So we want to see that if we're short. And I'll just go to the next slide so you can see this better in a clearer perspective here. But this is our selling absorption from the previous session. And like I said, this is most likely targets being filled from the longs from earlier in the day, as well as any new shorts being established there. And then our open was right here, and upon opening we see just this major imbalance to the buy side. So the market trades above the previous session's high, and we see all this volume up here, so most likely just stops or whatever being hit. And we do see that there is a imbalance to the sell side here, and somewhat of some absorption, or that's what you think anyway. So you get short somewhere up here with the idea of the market trading back down, as I had pointed out. So we trade down. It's a bit of a battle, a lot of volume coming in here, and finally we do make it down. The bar closes at the low of this particular bar, and we get a new bar that opens up and comes down, and we only get 105 contracts that can trade at the just below the previous session's low, and then there's an imbalance of about 1,000 contracts on the buy side or at the bid here, and then the next step up we have 4,000 or 4,800 contracts versus about 2,900, so still a nice imbalance on the bid there. And then once the market gets above that level, we see the shading here shift to the offer, and what that is buyers hitting the offer with market orders, and the market just makes this move right back up into this high volume area. So you're like, wait a minute, the market just came right back up to my entry area. This doesn't make sense, and then you say, well, context wise, I could see this on a price bar chart too. What's the advantage of using this volume thing? Well, the advantage is that you can see that, first of all, there's a large amount of volume that was transacted here, a large amount of volume that was transacted here, and very thin volume here, and then below this very thin volume. So basically all it is showing you is there's buying absorption, and it's rejecting the previous session's range. And when that rejection happens, the market's going to migrate right back up to where all the volume is transacting. So if you're short, you see that it coming right back up at you, clearly you're questioning how good your trade really is. Well, look what happens here. The market comes right back up, and just a major imbalance on the offer here. So buyers are taking the initiative here to buy the market via market order and push the market higher. Not only did that happen, but the bar opened basically right at your entry area, came down and tested this high volume area, or your volume point of control, and really not much could happen. There was no sustained move back below that level. So we had about 1,200 contracts that filled at the bid here, and those are just buy orders waiting to get filled, as well as market orders coming in here. You pretty much have to sit at the exchange to get those filled. But we had this large print, and then all of a sudden we have a low print here, and then we just move quickly right back up. So what that was basically just buyers coming in here again in a fast move. Excuse me, a fast move right up through that area and right to your entry area. So very important to see that evolving. And upon seeing that, it's just best to again just fall on your sword and get out of your position, because clearly the order flow is telling you that it's rejecting the previous session's range. And context wise, that we've got a serious imbalance probably that's gonna occur, and the market's gonna rip higher, which this particular day it did. So getting towards the end of this second section here, I've basically gone through different order types, how they read on the tape and on the volume at price tool, as well as how it enters into the market on your depth of market price ladder, or your DOM, and how these work. What's the tone, or what's the market telling you when you see these orders going through? What kind of behavior does that represent? And just talked about different scenarios as far as using your this information for your entries, as well as protecting yourself when you're wrong. I'll advise though that with regards to telling when you're wrong, it does take some time to really get a feel for how that works. So I wouldn't necessarily just go and flatten your trade anytime you see some sort of potential price action against your trade. It's going to take some time to really accurately recognize that unfolding. So I'll just warn that there. So maybe keep that in mind as you're watching this. So as we move forward here, again, providing all that information, you know, that's one thing on, you know, in a static environment, but what does this look like in a live market environment? And that's really, I think, where you'll see the value of this, and how it kind of gives you a good sense of what's occurring in real time. And as I mentioned, this is of the ES contract, and we know that at times this market can be fairly slow. So with that in mind, as well as in an effort to preserve time and your attention, I've sped it up, and I highly encourage you to pause the video, or even rewind it if you feel you've missed something important and it just went by too fast. So, or even watch it a few times if that, and just so you can really get a real clear understanding of what I'm commenting on there. So anyway, without hesitating further here, let's move forward and see how this goes. Okay, well, I hope that was helpful for you, and seeing that all unfold in more of a real-time environment. Like I said, it's one thing to see it in a picture, and it's another to actually see it occurring in real time, or in this case it was obviously recorded, but commentating on it as it is occurring, which really is the key to understanding and visualizing this tool. So like I said, if you have any questions, feel free to go on to my website, where I've designated there being a questions and answers section, and feel free to ask them there. And just going into our summary here. So with the volume at price tool, as I said, it's providing you with a distinct perspective of the volume that's printing in the market in a real-time manner. It allows you to gauge the tone of the order flow that's entering into the market, and it can be advantageous to your trade management process. So as I've pointed out in those multiple examples there, in my opinion, this indicator is best used for confirmation versus a reason for a trade. And I pointed that out in the video as well, of just areas of congestion that could provide you with head fakes just because you think you're seeing absorption or something like that. It really needs to be brought into a bigger picture context for any sort of trade ideas. And then, like I said, I'm setting up on my website a designated section for any questions and answers that you have. So with that being said, I hope you learned a lot from all of this, and I think at some point I may do some sort of follow-up to this presentation, or even potentially some sort of a live webinar type environment, or I mean, there's a lot of potential things I can do here just to further educate you. But this is really the strong educational basis of what can be done with this. And as I've made the announcement, not only do I have a video version of this, but I also have a PDF format of it that I highly encourage you to get as well, just to give you some material information to use and read, as this can be a little inundating at times and very technical, obviously. So please consider getting that as well. And anyway, hopefully you enjoyed it, and I will be talking to you soon. Cheers. Okay, the market just opened up and it's shaking itself out. Pretty much mixed tape here, just a flurry of orders. We do have some buying absorption right there. Volume point of control just shifted that point for the day. And now the market's moving up to our predetermined or pre-planned resistance area in our short entry area. Someone just hit the bid with over 4,000 contracts, and now they're absorbing the price as it went right back up there, and now they're hitting the bid. So some very aggressive activity at this high. That's what we want to see. Price moves right away. And then huge selling just stepped in. Poor consumer sentiment number just came out. Yeah, just a flurry of orders going off right here, and the sellers are starting to step in and take initiative to push this market lower. And they're hitting the bid. They're coming down to the previous session low. Potential targets right there, as well as maybe buyers stepping in. Market left behind an incomplete auction at the low of the bar. And there we go. It came back and cleaned that up. So we get some responsive buying now to step in here. So we see a passive seller right at this previous open level. Just a lot of contracts. We got a low volume spike above that, and let's say you're trying to add to your short position. That'd be a great location to add to it, with the idea of the market moving right back down to fill in that volume, so it gives you a quick scale out again. And now the market can't trade above where that seller was, so and we're coming right back to the low. If recent buyers are trying to defend that level. Just a little more buying absorption there, looking to get that offer lifted up and out of there. Delta's pretty sideways there, and now we can see that well, actually there was more absorption at today's open, if you saw that, and the market could not trade above the previous, or where that previous large seller was. So we've got absorption right at our high. Sellers are jumping in big time now, hitting the bid, and price is coming down to test that low for a third time. Very dangerous to try and defend that at that point. And there goes your stops. Sellers are taking initiative to continue to push this market lower. They're hitting the bid. Very aggressive here. They're capping the price. Can't trade back up into the initial balance now. They absorbed it right there. They're hitting the bid. Continuing to trade lower here. Any remaining buyers are probably starting to panic if they are continue to be long here. And we can see this point of pain stepping in for any buyers, as they're capping price to not trade within that previous value area, and just tons of orders is right there. So those are obviously targets being filled, as well as stops and whatnot being hit. So there's also people jumping in now saying, okay, we've probably hit our low for the day, so these are just weak hands getting long here. That blue line was a potential area of support that I had been watching before the day opened, obviously. And so there's some buyers stepping in now, but there's actually sellers now right up at this level trying to trap these weak hand buyers. So we're kind of auctioning right back down to those lows. So there's still sellers stepping in here. It's a bit of a two-way price action, but there's definitely sellers trying to make a new low, because they know where these guys' stops are being placed. And there they are. So I just took out a bunch of stops, and that's just a trap. One tick below the previous swing low, that's where they put their stop. And the market came down and took them out, and you see this big large amount of volume at that previous swing low here, or at this swing low, and you would get responsive buying stepping in now. So there's just basically what's happening now is just more buyers are coming in, and we're back up to that value area where there's a lot of selling that occurred, and sellers are still trying to defend this level. There's some little bit of selling absorption up there, and they're hitting the bid now, trying to push it back down. Now watch this volume point of control on this previous reversal bar, and we've only got a few contracts that traded there, and only 22 could trade below that level. So we've come right back up, and they're still trying to defend that level though. But keep an eye on that volume point of control that signified a good reversal that's come into the market here, or it's really just a change of sentiment. And when you see the market not being able to trade below that level, clearly that's what's happening there. So, some sellers not willing to give up here. They're still trying to absorb price and push us back down again. We're hitting the bid. I'll keep an eye on that level again. So we just couldn't trade below it. And now we got a passive buyer, sitting here, probably an iceberg or something, just bought up all the inventory there. Could not see how the market just cannot trade below there, and now we got responsive buying coming in here again. So this is the third test of that value area low that we're referencing. What happens on the third test? The market usually blows through it. And here we go. There goes the stops. Traders are getting out. Shorts are getting out. And there's probably some more sellers stepping in at the IB low, trying to sell this market back down. So you can see there are some orders coming in, hitting the bid, as well as buyers coming in. So really what this is just two-way trade. Is return to the market. The market's back in balance. It's trading back within value, and there's no longer a major imbalance to the sell side. It's two-way trade is occurring very clearly, as we can see on both the volume at price tool as well as the delta confirming that. So any other remaining shorts probably contemplating on whether or not to get out of this the remaining short position. And two-way trade, like I said, is taking place. We've got large volume coming in now. This is really just congestion. There's no sort of edge or meaningful event occurring here. It's just shorts covering as well as buyers stepping into the market, and we're trading back within balance and back within value for the developing day. I should clarify that, not for the previous session, obviously. So keep an eye on this lower ledge here. This value area low that was being defended earlier will be actually a great trade location for a long opportunity for a reversion to the mean, or really just a move to the other side of value, or the other side of this volume profile's distribution area. So we can see that there's really no follow through at all for the sellers, and there's immediate responsive buying that's stepping in, and buyers are really becoming more aggressive here, and so they're trying to get above that high volume, or that volume point of control here. You can see they're battling it, they're attacking that level, and now they're getting above it. So that really just confirms that sentiment has changed, and buyers are really being aggressive here and lifting the offer higher. So we've moved up to our volume point of control in the day now, and we're at the IB low. So keep an eye on this those two volume points of control we were just referencing here. So one from the previous bar as well as the one before that, and the market broke above that finally. So we don't want to see the market trade below that. So it's some absorption, some buyers are there, and actually some really nice absorption. There's still some sellers buying it or selling into that, but clearly there's buyers that are in control at this point, and they've controlled the situation and are lifting the offer higher now. So we can see they've become very aggressive now. So these are buy market orders lifting the offer. And any shorts that are still short from this move earlier, obviously, are going to be having to cover at this point. Still some aggressive activity. Some sellers are starting to step in now. Just saw large print come in, and that's absorbing some more. So for this last final push here, And here we go. This is just a nice flush type move. Targets are being filled, as well as we're on the other side of value, and there are sellers starting to step in here to be aggressive on that side and hit the bid and push the market right back down. So it's still a two-way trade, but that's just to the other extreme, obviously. So there's sellers stepping in and pushing the market lower now. So this is great confirmation that the market is now balanced, and it'll just most likely fill in this low volume area that I just circled on the volume profile. So when you see this, there's no edge in trying to trade in this middle of the profile, because we can see clearly now that the market's in a rotational type situation. We're coming down on this initial balance low here. Just revisiting those well, as I mentioned earlier, you see these fast moves, and the market will sometimes, or especially on a rotational day, it'll come back to those imbalanced areas and fill in more volume, which we're seeing right now. So just kind of two-way trade occurring. There's really, again, nothing very advantageous for trying to trade this. This is just chop, and when you see traders getting chopped up, this is what they're trading. This kind of a mess area. There are some buyers still here, and they're trying to get the market to move back up to where those targets were, so they can get out. And here we go. We're finally getting up there. So this is just any remaining longs that did not get out up here, they're probably going to try and get out now. And there, the market just exhausted itself to the buy side, and there's more sellers up here now as they were trying to get out of their remaining long positions. And you can see there's really no conviction in the market at this point, and it's just two-way trade. Like I said, just kind of filling in that volume on the this low usage area on the volume profile. You can see the volume in general is really thinned out, and that's just more confirmation that there's just really not much left to do at this point. So you've taken advantage of the short opportunity and added to your position, and once we saw the market came back into balance, which was confirmed by volume, we were able to take more of a reversion to the mean type trade, where we originate our trade from one side of value and target the other side, and that's precisely what we've gotten here. It's just random selling. They're not going anywhere in particular. If anything, just filling in low volume. Market can't trade above the volume point of control. Not that that means anything at this point. It's just really, like I said, they want to fill that volume in first. So hope this video has provided some good clarity. And like I said, be sure to pause in areas that the market moved quickly.